bring in Kevin Green, senior markets correspondent, to help take us through today's setup and get people prepared for the trading day ahead. It feels like there's going to be quite a bumpy road ahead today, especially given the context of what we finally got. We got the news after the closing bell yesterday, what these tariffs would be, this universal tariff across the board of 10%, but then more draconian tariffs against certain countries and places like China, European Union. So why don't we go through broad strokes for people and recap, kind of where we are, KG?
Yeah, so yesterday, obviously, the market was a little bit optimistic that this Washington Post report, if you will, stated that there was going to be a 10% tariffs across the board, right? And that the market was actually excited about that. We saw a little bit of a bid, but they only had half of the story. And unfortunately, when we actually got the news of the rollout here, as you kind of talked about, very aggressive tariffs on some of these countries that we trade a lot with. And I think the market's also trying to grapple with the fact that how these tariffs were actually calculated. They're basically looking at the trade deficit that we have between countries, just let's say China and ourselves. And they look at that trade deficit, and then they look at the amount of imports that China has for the United States. And they basically took the trade deficit, divided it by the imports, and then divided that by 2, and then that was the number for these tariffs here. And so when you're kind of looking at the rates for these tariffs, they're very aggressive. For China, as you kind of talked about, there was already some tariffs that were in place. There's an increase of 34% with the reciprocal tariffs. You add that to the 20%, you're sitting at around 54%. Now, if you also include the existing tariffs that have been in place for since the Biden administration and since Trump's first term, the blended average tariff for China right now is sitting at 65%. So that's very aggressive. We see the same thing across many countries here. And that's why we are seeing a sell-off. There's a concern about growth fears in the market. You are seeing the dollar move to the downside. And at one point this morning, Diane, the dollar moved so much that it went as low as what we saw back in 2015. That's how aggressive this move is in the currency market. So let's see how the market actually reacts when we open up here. It is an aggressive sell-off to the downside here. We are trying to hold this 55.20 level on the E-mini S&P futures. And let's see if some buyers try to step in here. But once again, it was it definitely caught the market by surprise, and it was not really priced in. Oh, and if you're looking at the VIX, VIX is only sitting at around 26.5 right now. That's actually very cheap compared to a 3.3% move in the S&P 500. So vol is actually relatively cheap compared to the realized move that we've seen overnight.
Okay, so let's talk about, look, the 10% did sound, that sounded like, that wouldn't be too much, but you're right. We only had some of the story here. Now, even the European Union tariffs, those are on the higher end of what was expected. What does